the August 12th deadline to see if Beijing and Washington will reach a durable tariff agreement. Now, let's bring in Kian Soon, CEO with Astral Asset Management. Kian Soon, thank you so much for joining us in the studio this morning. So we are seeing that China markets closed higher yesterday because of that upbeat export data. So with that August the 12th deadline looming pretty close at the moment, do you think there's still meaningful upside for Chinese shares?
If you take a step back, the Chinese markets have actually performed pretty well over this year. I mean, year to date is up. Shanghai is up around 10%, while Hang Seng has shot up around 25% year to date. So this is very good performance. But however, the big elephant still lies in the room, which is the tariff negotiations with United States. So the market is watching this very closely. And if there are any major impacts like changes in the negotiation as well as the outcomes, I think the markets will react accordingly.
Mm-hmm. And also this morning, we are seeing some weakness in manufacturing as well as tech shares here in Singapore. So if we talk about that 100% tariff on imported semiconductors, so what's your evaluation on the impact, especially for companies here in Singapore and Malaysia?
I think with the announcement of the 100% tariffs, it is worrying for a lot of the companies because we have a huge semicon sectors that is exposed to US exports. Similarly, for our neighboring countries, for instance, Malaysia, I think the market has spoken, as we have seen that some of the stocks have reacted in terms of prices after the announcements. But I think it's still early days. The reason being things do change, discussions are being underway, and there's a bit of lack of clarity on how these tariffs is going to be imposed. For instance, it was mentioned that exports that are specifically for businesses in the United States that have invested are exempted from such tariffs. So there's a period of uncertainty because of lack of clarity on which companies are going to be affected. Ultimately, I think the name of the game is if the tariffs do impact the business, who is going to pay for these tariffs? Then we look at the supplier as well as the customers. Who has the bigger negotiation power? If the customers do have bigger negotiation power, that means the suppliers has to decrease their profit margins.
Well, in the meantime, we are seeing that Singapore stock market has been on a tear while lifting the SGX performance as well, if we see their earnings report. And so what's really fueling this kind of appetite for Singapore-listed stocks?
I think year to date, STI components have performed extremely well. It is up more than 13%, driven predominantly by, of course, the three banks, which is a big constituent of STI. However, we have also seen good performance of the other STI components. And literally, I would say, the whole index has been lifted up with a very positive mood, even setting records high for STI for 2025. I think this is a very good birthday present for Singapore National Day, which is tomorrow. And if you look at the outlook, I think it still has some runway because this positive sentiments is driven by the stability of the Singapore markets as we see regional investors all coming back to Singapore to partake in this stock market.
Mm-hmm. Well, you've mentioned one of the elephant in the room affecting stock market. Perhaps it's the tariff uncertainties. The other one that investors closely watching is the Federal Reserve decision, right? With the Jackson Hole meeting coming pretty soon. And also today we are having Trump's pick. Stephen Miron could be entering the board of governors. So how does that change or shift the composition will affect central bank decisions, not only for the US, but also for central banks across the region?
So for a certain period of time, I think Fed has been holding the rate steady, which is not what President Trump really wanted, as he has imposed certain kind of pressures for Fed to lower the interest rates, basically to kickstart the economy. And we could see this tension being played out throughout the year. So far, we have no interest rates reduction so far. And the market is still anticipating 2 to 3 rate cuts, more likely to end of the year. So like what you mentioned, all eyes and ears will be listening to Fed's Chair Powell's speech in the coming Jackson Hole meeting, literally looking out for clues as when the interest rate is going to be reduced, as this has huge impacts on the fixed income as well as equity markets. And in particular, even you look at the real estate markets, they will be all eyes watching on if interest rates is going to be further reduced.
Mm-hmm. So amid all these uncertainties, how investors should arrange their portfolio at the moment?
At the present moment, I think all investors should remain, keep an open mind and have a diversified portfolio, because under such circumstances, you don't really know which of the markets will really outperform and which asset class will really have the final say or the best performance for 2025. So far, even people expected with all the geopolitical tensions as well as the macroeconomic uncertainties, stocks have really performed well. In particular, Asia Pacific stocks, for instance, Singapore, we have outperformed. And that is something that is really hard to read. So it would be best for investors to have an open mind, to keep a diversified portfolio so that they could ride on the bull wave, for certain asset class and not miss out.
All right, Kian Soon, thank you so much indeed for your analysis. Kian Soon, CEO with Astral Asset Management. Well, it's a double celebration for Singapore.